Okay, welcome to the weekly take on the market. Today is Thursday, July 10th. It's about 8 o'clock Pacific Standard Time. I've got something in the afternoon tomorrow, and I didn't want to risk not being able to do the video as I've had a couple of weeks off. Last week, two weeks ago, we had Arnie and Harold do their video, and then last week, 4th of July fell on a Friday, and I was out of town, and so it just didn't make sense for me to do a video and or to have like a colleague do a video since it was a holiday. So I'm glad to be back. I will be your host. My name is Scott St. Clair, manager of the Premium Product Group here, Investors Business Daily. Please take a moment to read the disclaimer. It's important for me to be able to speak freely on these videos. That the disclaimer is presented. I am not licensed. I cannot tell you what to buy, what to sell, what to hold, etc. Okay, so we'll do the market indices, the ETFs. We'll do stocks to watch, and then the quote of the week. Usual suspects. So sentiment. So lately I've been starting these videos with sentiment, and I think there's a little bit of like some people don't think sentiment works, which is fair. I think it's a secondary indicator, and I don't think it works as well to the upside like we are now. In other words, when people are very bullish from a sentiment standpoint, it doesn't historically usually lead to the market pulling back, but it works the other way fairly well, I think. I think that's, and I only have anecdotal evidence, but I bet if you tested it, I think it works very well the other way versus it probably works just moderately okay this way. But anyways, I find it ironic that as the market kind of went up, market kind of did what I thought it would do. And from a sentiment standpoint, I felt like nobody believed in the rally. It had to push to new highs. I said that for weeks and weeks and weeks that the market was going to make new highs. I didn't make as much money off of that as I should have probably. I should have just had, a massive position in the triple leveraged S&P UPRO or something. Anyways, I don't know why I didn't do something more along those lines, because I had a really high conviction that it would do what it did. And then they would drag people kicking and screaming because they were poo-pooing the rally. They weren't as sold on the rally. Now they seem to be coming around, so to speak, as the market has made new highs. So we're at 41% bulls. It's not over your skis. It's barely above the historical average, 35% bears. But for a while, there was more bears than bulls in this sentiment survey. Green and fear were on the, pushing the right side in the extreme greed area. I don't use this one as that much, but maybe I'll start watching it and see if there's any value add to something like this. The put call ratio, you can see, is pushing down. In other words, very few people are buying puts. Who would want to buy puts in an environment like this where stocks seemingly just go nothing but up? Okay, so let's go to the indexes. And you can see here's the NASDAQ, and I think, well, at least for the S&P, this is like a 30% rally off the lows. It's been a very good rally. I'm going to turn my camera off so you guys can see the chart better just in case. And that's a very good move. Now, does that mean it has to correct? No, but when the market makes these kind of really drawn out periods, you usually get some kind of test. Stock market's not that easy. Here's the test. So I feel like even if the market's going to go higher, we might get some kind of test here, but it's above all the moving averages. And from a mechanical standpoint, you can I've got the 21 and the 50 on here. Let's add the 10-day. So you can see the markets, if you had some kind of mechanical system, let's say you did third, So you'd wait for it to break below the 10-day to sell a third, the 21-day to sell the second third, and the 50-day to sell the third third. I just made that up out of thin air, and if that was the case, you'd be fully invested. It hasn't done anything wrong, so the market's acting fairly well. Just because it's sticking straight up in the air doesn't mean it has to pull back, but that's the game that you know, if you're like me and I'm not fully invested from a long side standpoint, that's the risk that I take. Now, there's two types of risks with not being fully invested in a bull market. There's the risk that, you know, the market leaves you in the dust, you know, the performance risk. And then there's the career risk if you manage other people's money. Well, I don't have that career risk, so that's one thing I don't have to worry about. I've had it before in my life many times. It's not fun. It's a lot of pressure to participate if the market's going up. So it's nice not to have that career risk. But you know, I want to perform as well. And if the market's going up and I'm not, you know, I feel a little bit, but I have a, you know, process that I'll stick to, and if I'll find a way to kind of get in, and it's funny, along the way I've found a couple of stocks kind of doing their own thing, and mostly I just let the stocks pull me in and take me out, and I try not to worry so much about what the overall market is doing. I honestly, if it was just me in a cubby hole trading and I wasn't doing this video, I don't know if I'd probably spend even less energy on the indexes, right or wrong. But between IBD Live and doing this video, and and maybe it's just a me thing, I feel like I probably should be in tune with what the indexes are doing because everyone else is, right? So it's a bull market until it isn't. The S&P. So yeah, you know, here's the new highs, and I would get nervous if it came back below that. That would be like alarm bells for me. So if you get into new highs and you come back below that, you know, so you kind of have a line in the sand, which is kind of where these moving averages are as well. So mostly new highs are bullish, but it's not always the case. Let's go back to the Dow Jones Industrial Average because this was kind of the one in the late 70s. Let's go to 82 when the really big bull market started. And let's go to the weekly. And let me go to best fit so we can kind of see this. So you can see it made a new high here, ran. That's a pretty good move. That's about 15%, but then it broke down, gave it all back. And then now this isn't new all-time highs, but that's like a 52-week high right in there, which failed. And then you get another like 52-week high in here, which failed. And then you get another 52-week high in here, which failed miserably. It's pretty bad. And then you get another 52-week high, which this one worked. I think you'd agree you'd have made some money, probably good money in that time period, from 918 to 1030. It's about 12-13%. But you can see how it got into new high here, kind of a 52-week high, and failed until finally get into kind of a really big trend where this one pretty choppy here, but eventually it worked. But you can see how sometimes the market head fakes into new highs and breaks down pretty poorly. So that would be my fear is if it into new highs. This one didn't, but into new highs, and that's a pretty good move. But when it breaks down from that, right, that's when I would say that you want to be. So and then the longer the base, probably the better. So this is a really good breakout on the Dow Jones in 95. Incredible. I can tell you this was the This month right here was when I opened my first brokerage account with my own personal money in March of 1995. Wow, amazing. But here's another one really good. Here's another one really good. Here's another one that worked. And maybe we're in one of these periods where it just works. But the key is it doesn't always work that easy. You have to be open-minded to anything happening. But right now, new highs. So I would say, as far as the indexes, if you're going to make a decision off the indexes, I'd use some kind of line like that. And as long as it holds above that, I think you're fine. Or use the moving averages. I think that's it. So let's go to the ETFs. So I created a screen called ETF Strength before I started this video. I just created it about 5 minutes ago or 10 minutes ago. And you can see like here's the Euro total market aerospace defense index is the best performer year to date. So these were ETFs that were up at least 15% for the year and have a market cap of 1,000 millions. Don't ask me to do the math. I don't embarrass myself. But there's 135 of them. Global defense, gold miners, ARC is in here a lot. China Bull, interesting. Germany, a lot of Europe ones in here, and a lot of metals, gold, because there's so many ETFs on gold and stuff. But you can see it's been a pretty good year for a lot of areas. There's some double ETFs like Hood and long MicroStrategy, stuff like that. The copper one jumped up probably, with that recent copper news, although it was doing okay. But as far as ETFs that I follow, you've got gold. I've got like this little declining, if it's building a flat base, acting fine. It's not going down. Bitcoin broke out of this base on base, this flat base. Again, acting great. I mean, I keep thinking that it will end in a fireball, Bitcoin, but wrong. I have not participated in the Bitcoin trade much at all. PPLT, which is platinum, really good breakout through here, runs up, consolidating. I do own this one. This one looks, I think, going higher, but we'll see. XXRP, which I think is a levered ETF on a coin, and I almost bought this morning. I almost did. I just can't bring myself to buy them, and it looks like it's up another $2 in the post market here. So I'm gonna be sorry come tomorrow morning that I didn't buy that one. the granny one this is a good one to watch for sentiment on the market, because it's got the Palantirs and stuff inside there. Just sitting there, acting very well. And how about the ARC ones? Acting very well. Actually, very well, acting incredibly well. So breaks out, goes up 20% 3 weeks or less. So there's a lot of areas in ETF land that you could have some money in if you're interested in those. I'm kind of warming to being more, maybe a portion of ETF. I used to never do ETFs basically, but this year I've done a lot more in ETFs. I think partly you have to be a little bit more patient with them, and I'm just not super patient. I'm trying to get better. But I've done a little bit more with ETFs this year, and I just have to be more patient. I just can't expect them to, to be like NBIS or something up 20% in 5 hours. I think that will do it as far as ETFs. So let me go back to, I think I'm good as far as that. Let's go to stocks. So let's just start with all the big boys. Nvidia, I actually bought like a really large position there because I'm like, it's Nvidia. I think you can have like a 30, 40, 50% position in it. It'd just be like buying the QQQs at 50% position. And it worked. And I sold it just because I had a big position in it. I just can't help myself. It's kind of strange. Maybe I'd have been better off with a smaller position, but who knows? But acting very well, obviously, it's Nvidia. And I talked about the Cisco trade a handful of weeks ago. 1990. I can't remember when yeah, like maybe Nvidia is like right here for Cisco. So you have a big, I'm sorry. Yeah. So here's Cisco, big correction, sideways, and then just kind of stair steps, holding the 10-week line the whole way. Maybe Nvidia does something like that. I think it could. I'm not saying it will. I'm saying I think it could. Now, it's a very large company. I mean, we're pushing 4 trillion. Is it going to double from here? I say no, but when I say that, I mean like in the next 6, 9, 12 months. I just don't think the economics of that happening are feasible. But I would also say it's not impossible. Anything can happen in the stock market. So there's Nvidia, there's Tesla. Tesla's a little bit tougher because it's just such a news-driven stock. I do not have a position in it as we sit here. I have been short it a couple of times, but I don't know. It just makes it. I was short, like for this gap down. I just decided after witnessing this gap down and watching it go up, 15% or 15 points the next day. Then when it gapped down here, I'm like, I'm just gonna take it. I don't want to watch it go up 15 points again. So I think it's a pass. I wouldn't be long or short it. I think there's better merchandise to be long. Microsoft, acting great. Apple's a laggard, but it's just an avoid. Is it going to go down? Do you want to be short Apple? I just don't see the point. Maybe we get into a bear market, maybe, but there's no point to shorting Apple. But I would pass on it. Google, building a base. Amazon. Mostly these stocks are just market performers. So for me, they're passes. It's not that I think they're in bad shape, but it's like I'm looking for something that can move a lot. And so if you're going to own Amazon, you might as well just own the QQQs or something. I think they're practically one and the same. I feel like I'm missing one in the group. Netflix, maybe. It was the leader. It's up 25% of the pivot. So how about the what is it, FNGS? Is that the FANG index? Yeah, so up 15% from its pivot on the breakout, acting great. No, I didn't talk about SMH on the ETF one, but this is probably the leading ETF as far as big liquid companies in there. It looks very similar to the indexes. Are the semis moving the indexes, or are the indexes moving the semis? Who knows? It's one or the other. They're maybe all of the same. Hood. So Hood is acting really good. Let me delete this. I was doing some work for the show the seminar we're going to have in a couple of weeks, and I was drawing trend lines, trying to find some examples of declining trend lines on where to buy. So looks great. Extended. You could draw something like this. You could see how it kind of played out a little bit there, but it's a leader, and it just depends on what type of trader. If you're a trader like me, like it looks like a sell to me. If you're a trader that likes to hold for long term, I don't know. I mean, it's just acting so well, and the numbers are really strong. So it's got all the trappings of something that some people, not me, but some people might hold for months and months and years and years. Carvana, So it gave it all back, and I would have expected. See, this is what I mean. See how the market, if the market does that, it got right to where, kind of in the danger zone, and it held. So maybe the market could do something like that, come back and then go back. But Carvana is acting fine, holding up. Duolingo, CSL now. Duolingo, this looks broken to me. So should have been sold if you bought it. You should never let something you're up 23% on get into the -7. If you just absolutely love it, then just sell it, break even, or up a penny or whatever. You don't want to round trip a 20% gain. HIMS, so really choppy and tough. This is a very difficult stock to trade and or hold and or invest in. But it's made a big move, and a lot of people love the story. So that's, it's something to watch for sure. VST on the energy side, just chugging along. TLN. So I almost bought this today. It's pulled back very close to the 10-week line, and I still might. I haven't yet, but I still might. I like the energy story, but we'll see. On the Bitcoin side, from the stock standpoint, you've got Coin. Oh wow, it's just acting really good. That was the day I should have bought it. I just couldn't bring myself to buy it. I don't know. I don't know why. It's just so silly. Because this is like the fourth or fifth stock where I almost bought that and didn't, and then it's a lot higher. MSTR. Hard to argue with that. They're holding up very, very well. Circle, the IPO. I don't know how. I've been in and out of this one a couple of times trying to capture it since the big move. Maybe it just needs time. Usually when they go public, they need time to digest the price action. Palantir. So it's a leader. It feels big and kind of waterlogged, sort of. Like it just needs. It's a market stock plus a half, if that makes sense. So, if the NASDAQ goes up 20, it's probably going to go up 30. If NASDAQ goes down 20, it's going to go down 30. So it's got a little bit more octane than like the Amazons, but it feels a little bit tied to the market as well. There's just so many stocks out there. Today, you had the news on MP Materials. You get this really big gap up. I think, to trade something like this, I'm usually looking for, in a perfect world, undercut and then start to go back off. That's how I would buy that. CCJ holding up just fine if you bought that. And Credo, nice little shakeout today, but closed unchanged, basically. Good action. You have some. So these are all the good ones. There's some stuff in the gold area that looks okay. AEM, I do own AEM. It looks like it's building a base. But then there's a little bit of signs of like speculation that bother me a little bit. So let's look at like BMNR. I think Tom Lee, Fundstrat CEO, I think that's his title, Fundstrat something or other. Everybody pretty much knows Tom Lee is, though if this ever turns into a massive bear market, he'll be in all the books as the big bull. And he's been right so far. He's been bullish and right for a long, long time. He became the CEO of this company, and it just exploded from 22 to 150, back to 46. Just shades of like internet bubble type stuff, and this is Bitcoin mining related. SBET, so it goes from 25 to 125 down to 9. and then 9 to 18. So, and what else, like Sezzle. So there's been some stocks, and I'm actually short Sezzle synthetically with some options. This looks climactic to me. I don't know. I don't know if I'm going to make any money on this one or not, but I just couldn't help myself. It just looked way too climactic. 10 to 60, down to 23, 23 to 180. But there's a little bit of this kind of excess going on in the markets. But it's not a lot. It's out there, but it's not, I don't know if it's overwhelming, but it is there. Like if the market fell apart here, we'd all say, see, Sezzle and BMNR and SBAT, they were obvious signs that there was too much speculation, and you should have known the market was going to go down. We're all going to say that, of course. But every once in a while, like you'll just see something like this stock has just gone bonkers. About no, not here. I wish here about PAR are there coming out of this little like mini consolidation. I should have bought it there, but it wasn't on my radar. But it's like, does PAR Pacific Holdings and Oil and Gas Refining, does it really care what the S&P is doing? Maybe a little bit, but as long as the S&P is not falling apart, the stock's going to do what it wants to do, and those are the best periods to buy stocks, I think, where the market's it's just not doing anything, because then the stocks are kind of moving under their own volition. ATAT is a Chinese hotel, broke out of kind of this space on base. Now it's done that before and it didn't work. If I go to the weekly, this base looks a little bit better. See, these are pretty sloppy bases, but you get this cup and then this really tight flat base. So technically this looks really good. The earnings and sales are everything about this look at the earnings line. I mean, it just screams it goes a lot higher. And then there's just one, because it's never easy. There's one thing, it's China. And so I just don't know how to wrap my head around Chinese stocks, whether to swear them off or not. So like I bought Futu as well because it just looked too good. Breaking out here. So now I've got 2 Chinese stocks. I mean, I went from, none to 2 to maybe in 5 days I'll be back at none, but Baba's not acting all that great. In fact, it's acting pretty poorly. So, and then, but I was on the bandwagon of not doing Chinese stocks, and it's hard to see the way this one, but I didn't buy this one when it was building this really strong technical pattern. And then this week I was pretty disappointed I didn't own it. Now it's only up 6% from the pivot, but still technically it looked really, really strong. So, I don't know. I don't know what to make of Chinese stocks, but I do have a little bit of exposure there. What else? I don't know. I feel like there's just so much to talk about. There's so many options out there, so much stuff that I could see people being fully invested even on margin if they're having really good year in some of the names and they're more patient than I am. So we'll have to wait and see. All right, I think that's enough for that. Let's go to the quote of the week. And because I was flying, I had a little bit more. I flew to the East Coast and had some time, and I was reading, and I thought I'm going to read Mark Douglas's book again. I hadn't read it in forever. And everybody always in Twitter, they always talk about Mark Douglas's books, Discipline Trader, and there's another one. I can't remember the other one, but so I thought I'll read it. And it's a little dated, to be honest with you, but the concepts are timeless mostly. But I found myself highlighting the book a lot, and there's a lot of really great quotes in there. But one thing that really stuck with me is essentially what you fear is not the markets, but rather your inability to do what you need to do when you need to do it without hesitation. So I talked about how there was a couple of stocks that I thought, oh, I should be buying that, and I didn't buy it, and now they're up, and it's like kind of kicking myself. Why didn't I just buy that one? And this is why I didn't buy it, because I was fearful that if I bought it, I wouldn't do the right thing once I was in it, and that should never be the case. It You should always, regardless, do the right thing once you're in it. So, like Futu or ATAT, like it's like I have this fear that I'm just going to wake up one day and they're going to be down 20% because of some tweet or something that the government says, or there's some I almost said geographical, but a geopolitical event that causes the stocks to gap down a lot. And what's the fear, right? Is that, well, if they gap down a lot, then I just have to get out, right? And it is what it is. I think the odds of that happening are really, really slim, but they're not zero. But I guess they're not zero for any stock. I mean, Circle could gap down 20% anytime, and I was in that pretty heavy. So it was just that fear that I won't do the right thing if that were to happen, and I'd be frozen and stuck in them. So it's just, as long as you have a plan and you know what you're going to do, I think you can take any and all trades. And in fact, I think you ought to take them all, because you just never know which ones are going to work. And so you just really, like from my standpoint, probably really shouldn't pass on any of them. Just get something in there that can make it easier to add to if you have to. But once you have that initial position, I find it so much easier to buy some. It's just that first initial position that some people can find it pretty difficult. And Mark Douglas talks about like edges. I'm pretty certain it was in his book where he talks about the edges. I think he said there's 3 edges. There's an informational edge, which is, I know more than you know, which I definitely don't have an informational edge over anyone really that trades. The guy on the Goldman Sachs desk, the hedge fund that's counting cars in the parking lot at Costco or whatever. No, that's the informational edge. There's just no way I have an informational edge. There's the technical edge, I think was the next one he talked about. And maybe I can read a chart a little bit better than the average person, but I don't have any technical edge as far as like, oh, if X crosses over Y and Y is diverging from Z, then you buy 30% of W or whatever. I don't have any of that. I'm keep it fairly simple. So from a technical edge, I don't have that versus some of these like hedge funds and pod shops that are just packed with all this technical knowledge that they have. So the third one was the behavioral edge, and that's the only edge that I have, is the ability to act. To if I buy something at 100, I could sell it tomorrow at 99. I can add more at 102. I have so much freedom to do what I think is right. Whether that it's a huge edge. I don't have to be fully invested. I can have a big position in a stock if I want, if I think it's acting right. And that's a big advantage to have that type of edge, because some big money out there, they don't have that. They might have to be fully invested. They might not be able to have more than a 5% position in a stock. They might not be able to go short if they want, or own certain products, maybe like the ETFs. They could be bullish on gold but can't own gold. So you have a huge advantage as far as that, as behavioral, is being able to act when the time is right. So that's really, I think, as an individual investor, really is the only edge that we have. And so you have to use it to the best of your ability. All right. So I don't know how long this video was. Hopefully, you got a little bit something out of it. That's my goal always, I think, is just like, hopefully you get like one little thing out of it each time that you guys watch. Appreciate the feedback. MarketSurgeInvestors.com or 800-831-2525. Have a great weekend, everybody. And we will, I think, I'll be back next week. See you later. Bye-bye.